The market is expensive. If someone seriously says this market is cheap, I have one question. Compare it to what? Many stocks are expensive. Some stocks look like bubbles. The world is unstable. New conflicts, energy risk, inflation risk, too much money in the system. And the last real market crash was too long ago. Could a serious crash happen in the next few years? Yes. Could it happen sooner than people think? Also yes. So what now? Stop investing? Put all money in the bank? Keep cash under the mattress? Live only for today? No. We still have to build wealth for our future, for our family, for our children, for retirement, and maybe in this world, even for survival. Because this is what people with self-respect do. And I want to be one of them. So I'm not stopping, I'm investing. But I'm not investing blindly. I want a portfolio with structure, 80% base, 20% ideas, and in this video I will show you exactly what that means. Hi, I'm DP and this is Durable Profit. I'm 33 years old. A few years ago I reached financial independence. Over the last years I moved almost all of my capital into real estate. Today I own real estate in Spain and other countries and I live from passive income. By the way, I'm also in the process of getting extra citizenship through a citizenship by investment program, because in this world one more safe option is not a bad thing. Right now I live in Spain, I invest through interactive brokers, and now I'm starting again. I'm building a new public stock market portfolio. I will show my real buys, my real sells, my mistakes, my thinking and my portfolio updates. This is the first video in my public portfolio series. Today I will show you my current portfolio before the next deposit. Then I will explain my strategy. And in the next portfolio video I will add new capital and start building the 20% ideas part of the portfolio. If you want to follow a real public portfolio from the beginning, subscribe to the channel and turn on notifications. This is not theory, this is my real money, my real decisions. And I will keep all portfolio videos in the public portfolio playlist, so anyone can follow the full journey step by step. Now let's talk about the market. I do not think this is a normal or cheap market. The biggest companies become huge. A lot of money is concentrated in the same popular names. AI stocks, technology stocks, mega cap stocks. Many of them are priced for a very bright future. Maybe that future happens. Maybe earnings continue to grow. Maybe the market goes higher. Fine. But I am not here to worship the market. I am here to make money. Everything else is poetry. When prices are high, future returns usually become harder. That does not mean I sell everything. That does not mean I panic. But it means one thing. I want room to move. Because the world today is not stable. Wars can move oil. Oil can move inflation. Inflation can move interest rates. Interest rates can move stocks, bonds, real estate and currencies. Everything is connected. And if you invest like the world is calm, but the world is not calm, your portfolio may be weaker than you think. My strategy is simple, 80% base, 20% ideas. The base is the long-term part. This is where I invest in the growth of the world. Because yes, the world is unstable, but I do not believe the world will simply stop. People will still build, companies will still compete, technology will still move forward, countries will still grow, consumers will still spend, capital will still look for returns. So 80% of my portfolio is my long-term base. This is not the exciting part, this is not the viral part, but this is the part that keeps me in the game for many years. The other 20% is ideas. This is not gambling, this is not casino trading, this is not buy every stock that goes up. This is my flexible part. If I see a good stock idea, I want to have capital. If oil becomes interesting, I want to look at it. If gold gives an opportunity, I want to think about it. If the market crashes, I want to have cash. If the world gives me a real opportunity, I do not want to watch it with empty hands. So 20% ideas does not mean I must buy something every week. Sometimes the best decision is to wait. Sometimes cash is not laziness. Sometimes cash is a weapon. Now let's look at my current portfolio. This is my portfolio before the new deposit. Right now it is built mostly with ETFs. ETF means exchange traded fund. For me, the main benefit is diversification. Instead of betting on one company, I can own hundreds or even thousands of companies through one instrument. That is the base of my portfolio. I invest from Europe, so I use European instruments. But for viewers from the United States or for anyone who invests in dollars, I will show the closest US or USD equivalents in the description of every portfolio video. I will also mention them now, position by position. They are not always perfect copies, but they can help you understand the role of each instrument. The first position is IWDA. This is my developed markets ETF. For me, this is one of the main parts of the base. It gives me exposure to the large and mid-sized companies in developed markets around the world. This is my long-term bet that the developed world will continue to build, innovate, produce and grow over the time. I do not want to choose one company and hope I am right. I want broad exposure. I want the system. I want the whole machine. A diversified developed markets ETF is boring, and that is good. Boring can make money. For viewers from the United States, the closest alternative can be something like URTH. For dollar investors outside the United States, SWDA can also be a similar USD listed UCITS version. If you want a total world approach, you can also look at something like VT, but this is not the same because VT includes emerging markets too. I will put the full list in the description. The second position is SPYM. This is my emerging markets ETF. I want exposure to emerging markets because the future is not only the United States and Europe. There are growing economies, growing populations, growing middle classes, and different cycles outside developed markets. Emerging markets can be volatile, they can be painful, they can stay cheap for a long time, but I still want them in the portfolio because if I say I invest in the world, then I cannot ignore a large part of the world. I do not need emerging markets to be perfect, I just need exposure. For US or dollar investors, the closest alternatives can be VWO, IEMG or EEM. Again, not perfect copies, but similar building blocks. The third position is XSWC. This is my global small cap exposure. Small caps are more volatile, they can fall harder, they can be ignored by the markets for years. But I want some exposure to smaller companies, not only the biggest names in the world. If my portfolio only owns the largest companies, then I am always buying what is already big. Small caps give me another source of return, another risk factor, another way to diversify the portfolio. This is not the biggest part of my portfolio, and it should not be, but I want it inside the base. For US investors, there is no perfect single equivalence for XSWC. A possible approach is to combine something like VB for US small caps and VSS for international small caps. Not exactly the same, but the idea is similar. Get exposure to smaller companies. The fourth position is PRAB. This is my short-term bond ETF, and this is very important. For me, PRAB is part of the base. It is not the 20% ideas part. I use it for stability, for rebalancing, and for buying the market if we get a serious crash. Some people think bonds are boring. Good, I want part of my portfolio to be boring, because boring assets can give me power when everyone else is panicking. If stocks fall hard, this part of the portfolio can help me buy more equities at lower prices. So PRAB is not just defensive, it is strategic. This is the kind of asset that does not look interesting in a bull market. But when the market breaks, suddenly everyone wants safety. I want to have safety before everyone else needs it. For US or dollar investors, the closest functional alternatives can be SGOV or BIL because they are short-term treasury ETF type instruments. They are not the same as PRAB because PRAB is euro-based, but the role in the portfolio can be similar: stability, liquidity and flexibility. The fifth position is SGLD. This is my gold position. I do not treat gold like magic. Gold does not produce earnings, gold does not pay dividends, gold does not build factories, but gold has survived currencies, governments, wars, inflation and financial systems. In a world with geopolitical risk, inflation risk, currency risk and unstable governments, I want gold in my portfolio. Gold is not there to make me rich quickly. Gold is there because the world is not always rational. And when the world becomes irrational, gold can become very rational. For US or dollar investors, possible alternatives are IAU, GLDM or GLD. I will put all of this in the description. Before I move to the next step, one important point. In this video I am showing the instruments and the logic behind them. In the next portfolio video I will go deeper. I will show the actual allocation. How much of the portfolio goes to developed markets? How much goes to emerging markets? How much goes to small caps? How much goes to short-term bonds? How much goes to gold? And then I will make the next deposit and start building the 20% ideas part. So this video is the starting point. The next one will be the action. And finally, I have a small cash position. Right now, this cash is not enough for my new 20% ideas structure. And in my opinion, this is exactly the kind of market where having cash for ideas makes sense. We have instability, conflicts, inflation risk, expensive markets, and the real chance that better prices may come faster than people expect. That is why the next step is important. In the next portfolio video, I will add new capital. The goal is to create the 20% ideas part properly. At first, this 20% can be cash, and that is fine. I do not need to force an idea just to look active. I do not need to buy oil, gold or a stock just because I made a YouTube video. The first job of the ideas part is to stay ready. Then I will look for real opportunities, individual stocks, oil, commodities, market panic, special situations, cheap assets, strong businesses that the market hates. That is where the 20% ideas part will live. But step 1 is not buying, step 1 is preparing. Why am I doing this publicly? Because most finance content is either too perfect or too fake. People show the result but not the process. They show the winner but not the waiting. They show the good trade but not the doubt. They show confidence after the fact. I want to show the real thing, the boring months, the difficult decisions, the rebalancing, the cash waiting, the ideas I reject, the ideas I buy, the mistakes, the result. This is the point of the public portfolio playlist. Every video will be the part of the record. If I buy something, I will explain why. If I sell something, I will explain why. If I do nothing, I will explain why. Because doing nothing can also be a decision. So this is a starting point. The market is expensive. The world is unstable. I am still investing. But I am not investing blindly. My structure is simple. 80% base, 20% ideas. The base is for long-term wealth. The ideas part is for flexibility, active decisions and market opportunities. In the next portfolio video, I will show the actual allocation, add new money and start building that 20% ideas part. If you want to follow this from the beginning, subscribe and turn on notifications. I will keep every portfolio video in the public portfolio playlist. And if this idea speaks to you, write it in the comments. I want to see who is here from the start. And if you want the list of my European instruments and possible US or USD equivalents, you can find it in the description. This is not financial advice, this is my real portfolio, my real money and my real thinking. I am DP, this is durable profit. We are here to build wealth. Or to say it more simply, we are here to make money. All the rest is poetry.